Hello and welcome. I have a very special guest on this edition of India Today's Jumpstart. His forecasts make billions of dollars and he's recognized as one of the most original thinkers in the world of business. A globally renowned money manager whose views matter as much in New York as they do in London, Shanghai and Tokyo, but who remains firmly rooted in India. I am delighted to introduce to you the Chief Strategist of Morgan Stanley Investment Management, best-selling author and world-class corporate intellectual, Ruchir Sharma. Ruchir, welcome to India Today.
Thanks, Rahul. Good to sort of see you, albeit in a very different form this time.
Ruchir and his team have put in a lot of effort in putting together an elaborate presentation about what the post-pandemic world will look like. How we'll do this broadcast is I'll take you through the points the presentation covers and Ruchir will explain what he's saying and why. But I want to start by asking Ruchir about what he's known world over for, his views on the stock market. Now, when the full extent of the damage this pandemic would cause became apparent, the markets tanked initially but have since started recovering. And there's a lot of bafflement about why the markets seem to be on the upward curve when you don't know how long the pandemic will last, when growth will start recovering from. What's your net sense of the global markets and the way they're going at this moment?
Right. So if you look at the pandemic itself, the news over the last week has been less bad. I think that's the best way to characterize it. Why do I say that? So if you look at the increase in the global infection rate, that has slowed down now to about 2.5% a day. So that's a pretty substantial flattening of the curve. Similarly with the mortality rate. So what the markets are doing is focusing on this news and thinking that maybe, just maybe, there is an end in sight to this global pandemic. But the most important reason, I think, as to why we have got this extremely extraordinary bounce in markets across the world, which are on average up about 25 to 30% from their lows, is the incredible amount of stimulus this time that policymakers have thrown at this problem. Just to put this in perspective, the amount of stimulus that policymakers have so far put is at least twice, if not thrice as much as what was put in the entire global financial crisis of 2008 and 2009. So there's a lot of very easy liquidity which is swarming the global marketplace. Just in the US, around $2 trillion of money has come into money market accounts and new bank deposits. So that's the kind of money that people are seeing in their accounts. And this huge liquidity wave is helping prop up asset prices.
We haven't seen quite the same kind of stimulus in India yet. Despite that, there has been a bounce back. The lockdown has been extended till at least the mid-May for the large part of the country, except for some relaxations in the green zone. What's your sense of what might happen in the Indian stock markets over the next few weeks?
You know, the Indian stock market, I think you have a graph here to show that. The Indian stock market is completely correlated to global stock markets. In fact, if you see that graph, you will not be able to tell the difference between these two markets. That's always been my sort of hypothesis as far as the Indian market is concerned. So the market here takes its cue from what's happening globally. Look at it even this year. The average emerging market this year is down about 17% in dollar terms. The Indian stock market, it's down about 20%. So it is really very much the same story everywhere, that the same forces which rise and fall and take markets up and down, those are exactly the same forces which are at work as far as the Indian market is concerned.
Let's now zoom out for a moment and shift focus to the post-pandemic world. Ruchir has identified 8 different trends and we'll go through those one by one. But I'll start by asking the one very obvious question, which is that a lot of people, when they look at what's happening, they say the world will never be the same again. Is that just a manner of speaking, or do you believe that this really is one moment when you look back in history, there will be a after Corona era and a before Corona era?
Yeah. So I have come up with that sort of framework of talking about a BC and AC era. But here's where I want to caution people a bit in extrapolating too much, which is that if you look at the past pandemics, including the Spanish flu of 1918, 1919, and the Asian flu of 1957-58, here that those incredibly destructive episodes told us very little about what comes next. You had the Spanish flu, which killed more than 50 million people worldwide when the population of the world was 1.5 billion people. But it was followed by the biggest economic boom in history, the Roaring Twenties, as they called it in America. The 1920s for the Western world, particularly for America, was the best decade ever. So it told us very little about what comes next. The 1957-58 episode is possibly even more instructive. Where more than 2 or 3 million people died worldwide, including 100,000 in places such as America. And what is remarkable about that episode is nobody remembers anything about that episode. I've tried to ask this question to my father or other people who lived through that generation, and nobody even remembers what that episode is about. So it is very sort of tempting when we are going through such a stressful period, we're going through such an extraordinary period, to think that this is what the future is going to be about. But if you look at past episodes, it's not necessarily true. So the way that I see in terms of what's going on is that this episode does not change everything, but it possibly accelerates many things.
So let's focus on each of those trends one by one. One of the meta trends you've been thinking and writing deeply about is deglobalization. At this moment, there are walls everywhere. Nobody wants citizens from other countries to come in. They don't even want citizens to be leaving their cities or states. But once the virus settles, to what extent will this pandemic have accelerated the global sense of deglobalization?
So as you know, Rahul, that I've been writing about deglobalization for many years now, right? It's been one of the central themes of my writing for the last decade. What do we mean by deglobalization first? It means that the flow of goods and services, capital flows, migrant flows, all these flows have been slowing down, because this is what led to the hyper-globalization that we saw in the world in the 1980s, 1990s, right up until the global financial crisis of 2008. After that, we started to see protectionist barriers go up everywhere in the world because we had slower growth, and people and politicians thought that the way to counter that is by sort of putting up barriers. So that trend was very much happening before the pandemic hit. The share of global trade had already declined from its peak level of 60% of GDP. This year, it's going to decline to 53% because we have a global recession. So trade volumes have contracted. But my feeling is that we're never going to get back to 60%. This is a trend which is going to continue. Look at what's happening across the world. There's a rise in nationalism. One of the trends I speak about is the rise in food nationalism now, that you have countries sort of getting much more insecure about how much food they export. Even as far as India is concerned with rice exports, or if you look at country by country from Russia to Kazakhstan, and even countries like France, which have such a liberal mindset, you have the president, the ministers there talking about banning some levels of food exports and not wanting to be reliant on food exports from other parts of the world. So this is a very sort of different world compared to 10, 20 years ago, where the interdependencies were increasing. Now, walls have been coming up, and I suspect that that trend only accelerates after this crisis as one of the scars left.
What does that mean in the Indian context? Because one of our key challenges is to try and push exports. That's what China based their entire surge on. India hoping to play catch up, but at a time when countries are putting up these new barriers. How does this march towards deglobalization impact the India story going forward?
Well, I think it is a very significant impact on developing countries like India, because if you look at the past economic miracles, whether it was China, Japan, Korea, Taiwan, they basically exported their way to prosperity. Their export growth was twice as high as the rest of the world, and they were able to sort of export their way to prosperity. That model, I think, is very badly now in this era of deglobalization. So it's going to be extremely hard for countries such as India to export their way to prosperity. The reliance is going to be much more on the domestic markets, and we can see that. You have now the Prime Minister even here talking much more about self-reliance. This is the kind of talk that we would hear back in the 1960s and 1970s.
Let's now come to the second meta trend that you've identified, which is about strongmen and how you think that the pandemic could usher in springtime for strongmen. So let's look at the global picture. It is absolutely correct that several very popular leaders have usurped extra powers because there's a crisis that they're dealing with. How many of those powers do you think are here to stay? Do you believe, as an idea, democracy will also slip into recession?
And yeah, so that is another trend that was already happening before this crisis hit, which is that we were in what has been defined as a democratic recession, which is that in the world, following the collapse of the Berlin Wall in the late 1980s, we saw a massive expansion in democracy around the world. Following the global financial crisis, again of 2008, you saw a somewhat incremental return to authoritarianism. Countries such as Russia, Turkey were the poster childs of that sort of incremental return to authoritarianism. Now, look at what's happened in this crisis. As that graph shows, that leaders around the world have seen a massive increase in their popularity because of this crisis. So, in a way that people are rallying behind the flag in a time of crisis. Leaders have been talking about war, so people have been sort of rallying behind them. Even in places like India, it's quite remarkable that so many of the people on the liberal side who would sort of have issue with Prime Minister Modi and talk about an authoritarian streak, all those, not all I'd say, but many of those people now, as they feel personally fragile because of this crisis, have been solidly backing him on this lockdown. So that's a real shift that's taken place out here. But I think that what we will sort of see in the long term is that once you have ceded these powers to politicians in general, this is true everywhere in the world, once these red lines have been crossed, where they can intervene much more in your businesses, they can intervene much more about how you live your life. It may be under extraordinary times, but once these red lines have been crossed, it's very hard to get them back. So I do feel that this trend of a democratic recession after this incredible sweep of democracy in the world that we saw is something which is likely to accelerate after this crisis, even as we get some of our powers back. I mean, one thing which I think that the government is going to have much more of is, a sort of a surveillance state. I think that's the contract that's going to be sort of done between the people are going to sort of have to accept that, which is that we'll have to share much more information about ourselves with the government than we'd ever be comfortable with in return for what we think are better health norms.
Let's come to the next point you're making about the blurring of fiscal and monetary policy. Now, reserve banks globally have been firing away on their bazookas, providing a stimulus of a sort that we haven't seen, and governments are stepping in with a lot of stimulus as well. How do you see this impact national and global economies in time to come?
For such a long period of time, we thought that the central banks need to be independent of the fiscal authorities, that the central banks are sort of run by technocrats. They're not going to be, have much interference from the fiscal authorities or policymakers. But look at what's going on here, which is that so many central banks around the world, led by the Fed, are being forced to intervene in businesses, forced to give loans and bail out. So I think that what really happens here is that the central banks, their balance sheets get bigger and bigger, and their interference, along with the fiscal authorities, gets more extensive as far as the governments are concerned, and as far as people are concerned. So I think that this is another consequence of this, that the days of having truly independent central banks who could say that we are just focused on inflation and everything else is the worry of the government and the fiscal authorities, I think those days are over. In many countries, the central bank, I think, is going to be forced to buy back this government debt because the government debt levels in several of these countries are reaching very high and uncomfortable levels.
Have you wrapped your head around how much fiscal space does the Indian government have? What kind of a stimulus would be ideal for a country like India?
So we have some data on that, right? Which is that what's been the true level of fiscal stimulus? A lot of numbers are thrown around here. I think a lot of numbers are irresponsible numbers because we count all sorts of things. But if you try and sort of objectively look at it, and there are other sort of firms from, which have done this in a very sort of objective way, which is what's the true amount of extra spending that governments are doing. So the global fiscal stimulus is around 4% of GDP in terms of the true extra money that governments have spent. In emerging markets, it's been much less than that, which is that it's been about nearly half of that. And India has been even lower, where the true fiscal stimulus, the true extra amount, has been just over 1% of GDP. Now, there's been a lot of criticism that shouldn't India be doing a lot more than this? And I just don't think that is realistic because we don't have the kind of fiscal room because we came into this again with such a large fiscal deficit. And I think that like some of the advice given by people here, or just print money, just stimulate, I think is very irresponsible advice because this is not how it works in the developing world. And let me explain this. India's public debt as a share of its economy today is over 70% and could get as high as 80% in the next 1 year. What research has shown is that when debt levels in the developing world start to get to those kind of levels, borrowing costs rise very sharply. And even in India, it's, that across the world, interest rates have fallen, long-term interest rates, 10-year interest rates in the US, other places are all well below 1%. In India's case, or in other developing countries like Brazil, Indonesia, that has not happened. So in the developed world, they can virtually borrow free with long-term interest rates close to zero. In countries like India, Brazil, Indonesia, long-term interest rates are still over 6%, and they haven't fallen. So the borrowing costs are still high. And if we were to try and experiment with some adventure in terms of, let's print money and let's try this out, I think that we could have serious negative consequences where there's a loss of confidence. So in that regard, I think the government's being very realistic and responsible in not listening to this advice that we can print our way out of this mess.
The other thing I want to focus on is debt phobia, the fear of taking new debt. Do you believe this in any case was being seen post the 2008 financial crisis? Do you believe that this pandemic will accelerate that trend, and to what extent?
Yeah, so the big picture here, that there are four sort of constituents of debt. One is the household sector, the second is the financial sector, the third is the corporate sector, and the fourth is the government. What we saw was that we had this incredible debt super cycle, which began in the world in the early 1980s, as interest rates fell because of lower inflation, and you had a lot of financial sector deregulation. So we got an incredible debt boom around the world. Around 2008, when we had the global financial crisis, at least two of those four went down, which is that the financial sector and the consumer in many places was very badly hurt because of that crisis. And so they sort of got into a funk and went into a period of what was what I call debtophobia, which is scared of taking on more debt. But the corporate sector in many places and the government kept on taking more debt. After this crisis, the corporate sector has been really caught short. That in many places, the corporate sector has too much debt, and they realize that. So I feel that one of the consequences of this crisis will be that the debtophobia will now extend to not just the household and the financial sector, but also to the corporate sector. So the government really becomes the only sector which has the capacity and the willingness to take on debt. But the other constituents are going to be much more risk averse for taking on debt. And I think that's going to be the case in India as well, with the corporate sector here too, pretty heavily indebted.
We've already seen for AA corporate bonds a bit of a churn with Franklin Templeton's funds going under. How does that impact the corporate debt market in India, in your view, Ruchir?
It makes it very difficult for anyone who doesn't have the highest corporate rating to take on new debt. So this is where I think that we're going to sort of have to see as to probably more intervention than we've seen now by the RBI. But it is, as I said, that in this environment, the debt markets are literally shut for anybody outside the very, very creme de la creme for taking on new debt. So this is going to be a drag to growth going forward, which is that banks and the entire financial system is going to be much more risk averse after this. And so I don't think that you're going to be able to sort of get credit growth the way we did. Like we just forget the sort of, boom days of credit growth when credit growth would grow 30% a year. That happened. That was very excessive in the 2000s. But now to get credit growth above 5 or 10%, I think it's going to be a real challenge because of this persistent debtophobia on part of.
But ensuring that there is adequate liquidity and that companies can borrow with relative ease is crucial to reviving the economy. You've asked for more measures from the RBI. What specifically do you have in mind? What can the regulator and the government do to try and ease that debtophobia, Ruchir?
Well, I don't think they can do much to ease the debtophobia, but to prevent greater bankruptcies, it's the small and medium-sized businesses which really need much more help. at this stage. And I think that it is unrealistic for the government, I think like they know that, to try and force them to keep on paying massive wage bills at a time like this when they really are facing a cash crunch. I think this brings back to the original point, which is that how long can we sustain this? Because I think that what governments across the world are realizing, and so therefore moving from a state of emergency to exit as far as the lockdowns is concerned, that no amount of stimulus can substitute for reopening business. I think that is just a realization that's coming on. And so therefore, we are seeing this rush to try, or maybe rush is too strong a word, but this thing of to try and reopen. Let me put this in perspective in terms of one statistic. Some simulations have been done to this, that for every 1 month that any economy remains in a lockdown phase, it loses 1.5 to 2% of GDP on an annual basis. So hypothetically, if the Indian economy remains in some sort of a lockdown over a 3-month period, and remember, we have gone through the strictest lockdown of any country in the world, that straight away knocks off 6 percentage points of whatever growth you were expecting for the year at the beginning of the year. So that gets you into contraction territory. So that is what we have to remember. Every single month that the lockdown
So you're
extends,
essentially suggesting, from what I understand, that the IMF's projections and some of the other projections which still at this moment are in the positive territory, IMF said about 1.9%. That's hogwash. You believe that growth this year will actually contract and be in negative?
It's very early for me to say it because India doesn't have high frequency data, but look at what's happening in the world, right? We've got the first quarter GDP data in many countries, which includes March. China. Now, China, of course, as you know, has been under so much attack, but just look at the Chinese data. In the first quarter, the Chinese economy on an annualized basis or a quarter-over-quarter annualized basis contracted by over 30%, right? The US economy in the second quarter is expected to contract that much. And remember, these countries, whether it was China or the US, their lockdown was nowhere near as severe as what we have done here. So I know there's a perfect justification for doing these things, but the economic cost is all I'm talking about here, which is that the lockdown, and we've seen it across the world, the more stringent the lockdown, the greater is the economic impact. So if you have those economies there with less of a stringent lockdown, showing that kind of a contraction, and with greater stimulus, it's very hard for me to believe that how will the impact in pure economic terms in India not be greater.
I want to now zip through the 3 remaining meta trends, and I'll start with the 3D virtual economy, which in any case has seen a hockey stick like increase. Will that sustain? Do you think after a while it will plateau? What do you think the new normal post the pandemic could look like?
Right. So I think there are many habits, which were already changing, and those have been accelerated by this, right? So we look at things like Zoom calls. From 10 million or so users, now we're up to about 3 million calls or so. I mean, as far as Zoom is concerned, massive explosion. Obviously, you can't sustain those growth rates. But as far as all the other metrics are concerned, in terms of what's going on, digital leisure, I spoke about at the beginning of this year that how gaming was the new favorite pastime of the world. It's become even more so after this crisis. So it's the same thing, that all these trends were already happening and those have been massively accelerated. Now, some of those trends unfortunately mean that some of the businesses are not coming back. I look at China and Korea. No one's going back to cinema theaters out there. Now, it may be too early to say it, but they're going back to bars and restaurants. But I think that something has shifted there, that why do we need to go to a cinema theater compared to the streaming services that we have at home? So those businesses could be fundamentally damaged in a way that they don't even come back in any way close to the shape that we were before the crisis. But mostly this is about a massive acceleration of the trend. And yes, what's happened is that the trends that I and other people were expecting to play out over 5 or 10 years have telescoped, at least in the digital world, and happened in a period of 5 or 6 weeks, literally. So I think that, yes, it'll plateau, but the acceleration has been incredible and telescoped in time.
Let's deal with the productivity puzzle, because labor productivity is going down, tech productivity is going up, and in any case, labor productivity has been going down for about a decade now. How do you see this pandemic impact human beings and their productivity?
So I think there are two offsetting sort of things here. On the negative side, what I've written about a lot is that because around the world there's been so much cheap money, and the central banks and governments have been so inclined to just keep bailing out companies whenever they get in trouble, a trend that dates back to the 2008-2000 financial crisis and even before, it has kept alive a lot of inefficient companies, what I call zombie companies. These are companies that can barely sort of survive if it weren't for fresh cash infusions all the time. So it's kept alive zombie companies across the world, and that has led to much greater inefficiencies. There's a great line out there, which I like, a truism that capitalism without bankruptcies is capitalism without hell. So that it's a sort of thing that you almost need bad companies to go bust, but you keep them artificially alive all the time, and that's not good for long-term productivity. So I think that is something which has only now been accelerated by this crisis, because you've been forced to bail out so many companies, good or bad. The good news on the positive side is that because we are all thinking about how to rearrange the workforce, how to get more efficient, many people are discovering that maybe working from home is not such a bad option. It saves us on commuting time. And the fact that also increased automation, increased use of robots, all these things may help increase productivity. So what I spoke about was that in the last decade, we had this incredible tech boom around the world. And yet there was very little increase in productivity, which was the productivity puzzle, explained partly because of these zombie companies. But what we could see now is the fact that as you see at least some increase in productivity with a more efficient ordering of the workforce with robots, automation, that could help productivity a bit in the long term as well.
And finally, since your heart always lives in India, no matter where you live in the world, Ruchir, what would you like to see the Indian people and the Indian government do to ensure that to the extent that's possible, we can turn this crisis into an opportunity?
Right. I think that the first thing is that we have to fight this incredible fear, right? So which is the fact that, the Prime Minister here has been very popular. As I said, that he's had a lot of people who were, otherwise critical of him, sort of back him on the. I think that he needs to now take a leaf out of the FDR's speeches of 1933 or so, which is that we have nothing to fear but fear itself. I think that after sort of living in this environment where where the entire country has been shocked and is living in this complete fear because of this, now what we need is leadership of taking you out of this fear, of sort of explaining that why in terms of we have to cope with this rather than to fight this, and that this is here to stay in some form or the other, but we have to focus on what the economic damage from this is. So what I would like India to see here is, and something which I've always said, that all emerging markets tend to only reform when they have their back to the wall. So let's see whether we can use this opportunity to carry out economic reforms, whether it's got to do with, we need more capital, whether it's more privatization, whether it's got to do with, greater labor reform. But the most important thing I want to see India do is to be less of a statist society, less of an interventionist society. And that is my fear, because you do not want to get back to an era where the bureaucrats or the other, sort of politicians have so much power that they can tell businesses, you can do this, you can't do this, because that is, I think, really hurting business. So I know that it's very popular to talk about pro-poor and stuff, and to talk about an increased welfare state. But we have to remember, if we want that, the lessons of China, Korea, Taiwan, all these countries were very clear that we need to get people to work, and that's how they became miracle economies. And that's what our focus really needs to be at. So I'd say a combination in the short term on how to deal with this incredible fear that I think has gripped the nation because of this huge crisis worldwide. And also in terms of that, are we going to return to our reformist sort of roots, which we should do when faced with such a crisis?
Well, this has felt like a high quality strategy presentation. It's been a delight to listen to every one of your answers. So much rich insight there. I could have gone on for another half hour, but we're out of time. Ruchir Sharma, for sharing your insights with us. Thank you so much. Stay well, stay safe. Thanks for joining me on the Jumpstart.